gold if you'd like.
Yep.
All right.
All right, Eric, rock it, bro.
We've started.
Very well.
Let's see who we got. All right. We got people coming in right now.
Nice.
Welcome, everybody. Welcome. Nick, good to see you. Michelle, Mr. Matt Beasley.
Hey.
Happy to see you there. Austin, Robert, Latina. There she is, Latina Baxter, one of our students out of Phoenix. All right, we got people coming in left and right. Brad, happy to have you. There's Jane's MacBook Air. That is my mom supporting the cause.
Hi, Jane.
Hi, Jane. All right. So while we're waiting, guys, we're going to get started here soon, but do me a favor while we're waiting on other people to kind of jump in. Hunter, thanks for coming in. David, excited to see you guys. Go ahead. Do me a favor. Put in the chat real quick, guys. Where's everybody from? I want to get to know you guys a little bit more. What do we got here? Chat box. Do you guys see? Oh, is the chat box disabled?
Yeah, that's what it looks like.
This happened last time. Megan, do you know how to do that?
I'm looking. Hang on one second.
Okay. I see some Q&A. Boston, chat is disabled. Thanks, Michelle. Okay. Well, I'll let Megan kind of work on that real quick. Or I think she's co-hosting, so. This happened last time too. What the heck? All right. That's okay. We'll work on it. If you guys have, in the meantime, if you guys have, questions or anything, feel free to put them in the Q&A box. We can kind of check there, but feel free to put your, where you're from over in the Q&A. That works as well. We just want to see where people are from. We got Boston. I know we got Jane over in Oregon right now. Anywhere else? Anyone else here?
Okay, somebody just try the chat again.
Sweet. Virginia.
There we go.
Oh, hey, Brandon. Sweet. Thank you, Megan. Good looking out.
You're welcome.
Okay. Whoop, whoop. Demetrius, Latina from Phoenix, Houston, Texas. Matt Beasley, homegrown.
H-Town.
All right. Let's give it just one more minute and then let's get started. Austin, Denver. There's 3 of us here from Denver. So, fellow Denver folk. All right. You guys ready? Gibby's team?
Rock on.
Okay. I say we just get started.
Ready.
So,
Yep.
yeah. So for those of you guys that are here, we just want to be respectful of your guys' time. We are extremely excited about chatting with you guys today. We're going to try to keep it to about 30 minutes or so. So it'll be quick. So just do me a favor, try to stay tuned in with us the entire time if you can. There will be some really, really good information for you on the webinar. But first and foremost, welcome. We are very excited about today's webinar on the Village West Apartments, and just honestly, just to add as much value as we possibly can to you guys. For those that don't know who I am, my name is Eric Chatterton. I'm one of the co-founders and managing partners here at Gibby's Capital Investments, and I also head up all of the investor relations here as well. Now here at Gibby's, we focus on the acquisition and management of value-add multifamily properties. Our highest priorities are to protect our investors' capital, provide high-yield returns, and also to build relationships with you guys that are long-lasting, not just for one deal, but for many deals to come over the years. And so as a team and as a whole, Gibby's Capital, we've got almost 40 years of combined real estate experience. And once we close on this offering we'll be talking about today, we'll have acquired over 800 units and over $80 million of multifamily assets. So we're very, very passionate about what we do here, guys. And we're very passionate about helping other people to participate with us on these opportunities. You know, a big thing for us, you know, along our journey, we have really, really loved being able to educate our friends, families, coworkers, and just other busy professionals like us and like you guys on the benefits of investing in multifamily. And we're really, really happy to say that we have an incredible group of investors that follow us and put their trust in us time and time again. And we are very, very grateful for them. And some of them are even on this call and this webinar right now. So for those of you that have invested with us before, I want you guys to know how much we appreciate that you guys have continued to put your trust in us and how much we are grateful for your partnership. And we're always open to suggestions on how we can make the investor experience even better. And for those of you that haven't invested with us, well, what are you waiting for? Join the family, get in here. We're excited to have you guys here. But no, in all seriousness, if this is your first time, then welcome. And we hope to build a really long-lasting and fruitful relationship with you guys. So really quick though, what I'm going to do is I'm going to share my screen here. And I want you guys to kind of tune in and listen to this video really quick. And so let me know if you can hear this. Brett, Megan, you guys give me a thumbs up if we can hear it. But here we go. Welcome to Gibby's Capital. Our motto is to help you to get your hard-earned money working hard for you instead of you working hard for your money. If you're looking to diversify your investments into multifamily real estate and put your money to work with a strong team that can consistently perform, then you're in the right place. We're a family-operated team with strong morals and strong values, and we want to help you to take advantage of all the benefits of multifamily investing. Benefits like passive income, equity gains, tax benefits, diversification, and a whole lot more. We've got the experience, we've got the team, we have the deal flow. We want to bring you along for the ride. We will be that team that you can count on. If you're seeing this right now, then welcome. And we look forward to getting to know you and your investing goals a little bit more.
We are Gibby's Capital.
We are Gibby's Capital.
We are Gibby's Capital.
We are Gibby's Capital.
We are Gibby's Capital Investments. Okay. Hope you guys enjoyed that. Appreciate you guys taking the time to listen in on that really quick. I'm just going to jump into the meat and potatoes of this kind of stuff a little bit more here. So if you guys like that, give me a little thumbs up or a little fire. There we go. Matt Beasley. Amazing. Love it. Thanks, guys. Put some good time into that. Next, we need to get Matt Beasley up there. So, all right, I'm going to share my screen again. We're going to jump into a little bit more of the meat and potatoes of the presentation here. So can you guys can all see my screen here? Brett, Megan. All right. Awesome. So now, before we jump into everything, guys, first off, thanks for being here. We're super excited. I just want you guys to understand how grateful that we are to, even be in a position to talk to you guys about this investment and bring this investment to you guys. We just feel really fortunate that we've built the relationships that we have with brokers, property managers, other strong operators, and most important, investors like you guys. And, these relationships have resulted in some really amazing investment opportunities for us, including Village West Apartments, which we'll be talking about today. And we're really excited about the property. We're excited about the location. We've done very thorough and conservative underwriting on this deal. We've got a really solid business plan in place. So now, before we jump in, though, to the details, full disclaimer, this presentation is for educational and informational purposes only. I'm not a tax professional. I'm not a lawyer. I don't play one on TV, anything like that. This is not a direct solicitation. Use it merely as a way of evaluating a business relationship with us, okay? So just had to get that out there. Now, here's what's coming ahead for you guys. We're going to do a little bit of sponsor overview, do some quick intros, to the team. We'll go over the investment highlights, the current state of the economy. We'll jump into the business plan a little bit. We'll then go over return projections. We'll go over, the deal structure, the market comps, a little bit of the financials, and what the tax benefits might look like for you, the investor, as well. And then lastly, what we'll do is we'll go over the subscription process, if you want to participate and invest alongside us on this offering. So we expect this deal to fill up very quickly, okay? So remember, guys, this offering is on a first come, first serve basis. And considering the fact that we're over 65% subscribed already, we do expect this one to fill up very quickly. So we'll post a link to the investor portal in the deal room multiple times throughout the webinar. So, whenever you're ready, feel free to go ahead, visit the link, reserve your spot in the portal. And in fact, Megan, if you could, or Brad, or anyone that has that link, if you could post it in the chat now, that would be awesome.
There you go.
Awesome. Thank you, Brad. Cool. So like I said, guys, at any point throughout the webinar, just take your time, but whenever you feel like you're ready, go ahead, click that link. Like I said, we're over 65% subscribed already, and it's changing by the day. But then after that, we'll wrap up with an open Q&A session. So just do me a favor, write down your questions throughout. You can either put them in the chat or wait till the end and ask us in person. But we're here to answer your guys' questions, any and all questions you might have, so you can make the best decision for you and your families, and, figure out if this is the right investment for you. Okay. Now, next I want to jump into, and first just really quickly introduce my team, because I'm a firm believer that the operator team is the most important factor in the success of an investment like this. And a poor team can turn even a really, really good investment and make it underperform. Now, on the flip side of that, a strong operator team can turn almost any investment into a win. And that's part of the reason why we've worked very, very hard on putting together this team that we have here. There's a lot of experience on this team. There's a lot of knowledge, coming from multiple different backgrounds. So we're excited about the team we put together. And we're excited for you guys to get to know us a little bit more too. So let's do some quick intros. So first, we've got Brett Davenport. Brett is a numbers expert, probably the most handsome guy here on the call. But yeah, no, he's a numbers expert. He does all of our finance, our underwriting, and all of our acquisitions here at Gibby's Capital. We're very grateful for Brett. He does, he approaches these deals from a very conservative approach, which is, how we were taught to do this thing. And he gives me the confidence that I need to be able to move forwards on a deal and be able to present this to investors like you guys. So appreciate Brett and the way that he approaches and evaluates these deals. Next, we've got Megan Davenport, who's Brett's wife. And, honestly, she's our secret weapon. She does everything. Honestly, she does. And with her construction and asset management experience that she has, she's proven to be the perfect asset manager for our team. Her organization, her systems and structures and things like that she's developed for the Gibby's team has been a huge factor on what set us apart. So Megan is awesome, and we're lucky to have Megan big time. And next we have got Jim Chatterton. Go ahead, wave Jim. If you haven't noticed, guys, he's got the same last name as me. So he is my father. Jim is our most recent addition to the Gibby's team. And, he's got over 35 years of real estate experience. He is a complete wealth of knowledge in all aspects of this business, but primarily he helps and works with Megan on the asset management side of things. We've then got Caleb Christian. Caleb, give us a salute. Thank you. Caleb is a freaking rock star, guys. He brings a massive amount of value with his wealth management and financial services background. He works with me on the investor relations side of the business. So like I said, guys, this is my team. This is my family. I love these guys. The team is very important. So I hope you guys know that. And I'm not sure if I mentioned this to you guys or if you knew this or not, but Brett and Megan are not only my business partners, but they're also my in-laws. I just married their beautiful daughter, Savannah, just about 2 months ago. So if you've seen her, well, I'm married up. That is a fact for sure. So also, if you haven't noticed a trend here that you'll see, we are the definition of a family operation. 4 of the members on this team are all family members. So we love this. And personally, I believe that it's important for you guys to know that you'd potentially be partnering with a team that, they all share the same morals and values. And I think that's really important in any business that you might be involved in. So, and Caleb, well, he's basically family at this point. So we love the guy. I call him a brother, to me as well. So let's jump into some of the investment highlights here. So Village West is, we really love this property. It's a beautiful multifamily property. It's in a strong and stable market. It's located just 10 minutes north of the great University of Notre Dame campus. One thing that we really love about it is that if you look at the neighboring properties nearby, there are wait lists on several of the properties to be able to get in as resident, including Village West. So the demand is really high. The demand is there. That's one of the first things that we look at. Another reason why we like the deal is just there's a ton of upside potential that this opportunity presents. And we'll discuss that and go over some of what those details include as well. Now, this offering is available to accredited investors only. So, if you don't know if you're accredited or not, no big deal. Just book a call with me after this or with Caleb, and we'll go over what that means and, try to figure out if you are or are not accredited. We can help you look into that. Now, minimum investment amount on this deal is $100,000. Investors on this deal can take advantage of a preferred return of 7%. Now, preferred just means that the investors get paid first, as you should, for helping us fund the deal. And projected average annualized returns for this property will be right at 18% on your investment. So this is a good one. Now, we're typically underwriting 40 to 50 deals, before we even decide to pull the trigger on one of these things. And a lot of that work falls on Brett's shoulders. So he's putting in countless hours to be able to find those needles in the haystack for you guys. And we feel like it's our duty to be able to, present and bring opportunities like this to you. So I really, really appreciate Brett putting in all that time, but it will be about an 18% return on your investment on an annualized basis. And that's an average annualized return throughout the hold of the investment. You'll receive these returns in a combination of two ways, though. One, through cash flow throughout the hold, and then two, through the proceeds from the equity when we exit or sell the property. Now, here's just some pictures for you guys on the interiors, just so you can get a visual. Me as an investor, I always like to try to put as much eyes on the property as I can. These pictures are a good indication of that and what the interiors might look like. Now, here are some pictures of the exteriors as well. Like I said, we just try to give you a good visual of the interiors and exteriors, because if you guys are going to be putting your funds into this deal, it's good to make sure you get some eyes on it. Now, this slide here, this one just talks about, it's just another reason why we're so excited about this. And if you guys can see the graph on the far right here, you'll see that on the 1 bedrooms and the 2 bedrooms, we vary between $150 to $200 below market rates. And that is a huge factor. And I'm telling you, that's one of the first factors that we look at when we decide to pursue one of these deals. Now, this property, it was, it's being managed. It was kind of a mom and pop shop. It was being managed by one of the family friends, and they dumped a good amount of money into it a few years ago. But really, the current management hasn't been taking care of it the way that we would as an active operator. We feel like we can come in, really force the appreciation, increase the net operating income, and increase the value of this property, so all of us can benefit from increased cash flow and also equity on these deals. So that's just a good representation of where we currently stand. Now, here you'll look at some of the housing demand. I just kind of wanted to talk really quick about the macro environment that we're seeing currently, right? One of the things that we will not do at Gibby's is we won't get into a speculative real estate opportunity. We want to focus on strong fundamentals, the things that have gotten us to where we are today, right? And so what this slide basically shows you is exactly that. These two charts are, at the US national level, but the same story applies for us in our market. Basically, the top image here is it showing the apartment demand across the US. So you can see the huge spike. If you look at it over on the right, you see the huge spike in apartment growth over the last decade. And, we see that continuing to, progress in the future for a variety of reasons. But, also on the supply side, we just aren't building enough units to be able to support the population growth in the United States. And it's as simple as that, right? So with all the high demand over on the top graph, it leads us to exactly what we see on the bottom graph, which is record low vacancies. You'll see the 2.4% over there on the right side. That's across the United States vacancy rate. And so the big concept I want you guys to understand here is we're currently facing an affordable housing shortage, guys. People need homes that are affordable. They need homes that they can take pride in, where they call home. And that is where Gibby's Capital comes in. We take a lot of pride in helping people get those properties and get access to those too. So right here, what you'll see here, this is just the difference between renting and owning, and the cost difference between it as well. So, as we've known and seen over the last few years, home values have continued to increase, especially on the single family side. And we all know and have seen, the massive interest rate increases this year, right? So what this is causing is a huge spread between the cost to own a home and the cost to rent. So you can see here on the Marcus and Millichap image here that, over on the right, there's a $1,000 gap here between renting and owning. And what this is causing is a lot of first-time home buyers to be priced out of the market. They're not able to buy the homes that they really want to. So what happens is, well, they've got to rent. And that actually benefits us as apartment owners. So just kind of wanted to give you a little bit of our perspective on some of that stuff, renting versus owning, and why demand is so high for multifamily buildings and also affordable housing at the time. But I'm next going to hand the time over to Mr. Brett Davenport. He's going to go over some of the property details with you guys. And also, Megan, really quick, before Brett starts, if you wouldn't mind throwing in the chat again, or one of you guys throwing in the chat, the investor portal link one more time, I think that would be awesome, just so people can keep seeing it. Like I said, guys, whenever you're ready, feel free to go click that link and place your soft commitments in the portal. So I'll kind of hand it over to you, Brett. Take it away.
Sure. So this is a relatively small deal. It's 54 units, purchase price of $4.2 million. The raise on it is just over $2.5 million, largely because of the loan to value that we've got. Now, on this particular deal, we were able to arrange agency debt through Fannie Mae on a 10-year loan at 5.9% with 65% loan to value. Now, a year ago, 18 months ago, we could get 75 to 80% loan to value, so the raise would be smaller. But that's just not the world that we live in right now. But 65% in this market is still really good. Like Eric said, we are projecting an 18% annualized returns with an equity multiple of 1.9%. So on the 5-year hold that we have this modeled on, you'll just about double your money. Next slide. So the projected returns on $100,000 initial investment after 5 years is a total of $193,000. Or just over that. The cumulative return of 93.5% does include return of capital. So you actually get on your $100,000 back plus $31,500 in cash flow and just over $62,000 in equity whenever we sell the property or we have a capital event. Now we do model this deal and most of our deals on 5-year holds to start, and then I stress test the models at 3 years. 2 years and out to 7 and 10 years, mostly just to see what the numbers look like as we move forward. So we start at 5 years, but if we hit our 5-year numbers at year 2, we're not necessarily going to make sure that we hold it for 5. If it takes a little bit longer to hit our numbers, then we'll talk to our investors and inform them and, make sure that whatever we do is in their best interest based on whatever market we happen to be in and the condition of the market at the time. Next slide. So whenever we looked at market comparables, which is really one of the things that we look at to determine value and the ability to execute a business plan that's going to be the value add type of business plan that we look for. We want to look at properties that are close to it, that are of similar vintage, similar size, to find out where we can push rents to. Like Eric said, currently rents in this property are $150 to $200 below the comps in that area. And the other big thing that we look at is, besides the ability to push rents, is the ability to improve the units, improve the property, and also use that to push rents. Next slide. So some of the influencers that made this particular market really nice. It does have an international trade port with economic growth. There is tech and industry there. It is considered the RV capital of the world, with 80% of the world's production within 20 minutes of Niles, Michigan. I'm not gonna lie, I didn't know that. I never really cared where RVs were built before, but when we found this out, I was actually really encouraged by that. And then the median household income in this area is just over $52,000 with a 40% renter ratio in Berrien County. So what that tells us is just under half of the people in the entire county are renters. Some renters by necessity, some renters by choice. But again, with the current state of the economy and the variance between the cost of owning a home and the cost of renting, it just makes sense to rent. Next slide. So this does have 24 of the 54 units are 1 bedroom, 1 bath. And then the other 30 units are either 2 bedroom, 1 bath, 2 bath, or the 3 bedroom units. Now, the reason that's good is because it gives us a really even split on single people that want to rent with their 1 bedroom and some small families, especially the 2 bedroom, 1 bath is really attractive to small families and couples starting out with just 1 or 2 children. Next slide. Whenever we look at the 5-year performance and operating revenue, again, I won't read all these numbers to you. You can read it on your own, but you can see that the rental operating income and total operating income both increase over the 5-year hold. The idea, of course, is to increase revenue and next slide. And to reduce expenses on a percentage basis as we go forward, right? So total operating expenses are going to go up every year, but we try and get the operating expense or the expense ratio to come down to about 52% or less so that we can drive the net operating income, like Eric was saying, because in this particular space, that's what drives value of the property. Yeah, that's it.
Yeah.
That's all I got,
awesome.
Eric. Hand it
Awesome.
off back to you.
No, Brett, thanks so much for that, giving us a quick little detail. And just so you guys know, we're trying to keep it quick for you guys. Our last webinar went for 1 hour and 10 minutes. So we can get to talking if we really need to, but for the sake of time, we'll give you a good little, high level overview. Anytime you want, you can go into the portal. Like I said, you can get a more detailed, breakdown of some of this stuff, or really what you could do too is just book a call with us and we can go over all the details of the deal. But here on this slide, I really just kind of want to go over some cost segregation and bonus depreciation items. But as far as tax benefits go, I think most of you guys, already understand what depreciation is. If you don't, we can chat about that, on one of our Zoom calls, getting to know each other a little bit. But it's essentially just an accounting concept, right? But it is a very, very beautiful thing. Uncle Sam encourages us and rewards us to own real estate. And it's a paper loss in the accounting to offset the regular income. So normally, residential real estate depreciates over the course of 27.5 years. And commercial properties can also depreciate over 39 years, but with cost segregation, it allows us to accelerate the depreciation a lot quicker, between 5 and 15 years. Now, with bonus depreciation in the 2017 Tax Cuts and Jobs Act, it allows us to take advantage of 100% bonus depreciation and accelerate all that loss in year one. And so that is, first off, just so you guys know, that 100% is dropping after this new year in 2023 to 80%. But essentially, based on third-party estimates that we've gotten and our own experience using this exact same technique, up to this point, a passive investor on a value add deal with, say, call it $100,000 investment, would be able to realize a year one paper loss of between 40 and 60,000 bucks. So if you had a tax bill of, say, 35,000, then the depreciation off of a deal like this would be able to offset completely everything that you owe to the IRS. Best part is anything that is left over can, transfer to future years as well. So, honestly, a lot of successful and busy professionals count on us to be able to bring them opportunities like this, and so they can protect themselves come tax time. This is probably one of the very best benefits of investing in multifamily. Also, I'm not a tax professional or a lawyer, so consult with your tax professional and about those kind of things. Every situation is a little bit different, but that's a good example for you guys. A lot of investors are coming to us, especially at this time of the year, right before year's end, to try to take advantage of as many write-offs and benefits as they can. So now the big thing here for you guys is, how does this benefit you, right? If you have taxable income, then this depreciation can offset portions or all of what you might owe. And really, guys, if you have some money or that you haven't invested, or, and if it's just lying around, well, number one, you need to put it to work. And number two, you need to put it to work with something that can benefit from bonus depreciation and cost segregation. Right now, because there is 100% bonus depreciation, right now is the very best time to take advantage of this strategy. So definitely be keeping that in mind come year's end. But really quick, I wanted to, and Megan, I'm not sure if you're able to do it, but are you able to initiate that poll?
Let me try.
If you can't, I can give it a shot. Hey, while we're waiting on that real quick, Nick asked a question about why the loss to lease is so high. So I wanted to answer your question real quick so it doesn't make sure that we get to it. But the loss to lease, like Eric said, is high because the management team for this property was kind of a mom and pop shop. And they didn't do real thorough and consistent comps with the area. So, they set the lease terms and they kind of let that ride. And, the good thing for us is it gives us an opportunity to go in there, and because we are on top of the market, and because we do look at all those things in great detail, really allows us to bring that up and add value to raise the value of the property. And I hope that answers your question. If not, then let me know.
Cool. Thanks.
Yeah, you guys can see the poll is launched and some of you are already participating. So thank you for that.
Yeah, we've got a good amount of responses coming in. It looks like a lot of people here have invested in real estate. Those that haven't, welcome. Real estate is, 90% of millionaires are created through real estate. So hats off to you for getting to this webinar to be able to learn more about how this thing works. So We've got some that no, but I want to. A lot of people say yes, that they already have. So that's great. We welcome investors from all walks of life with all different levels of experience. But looks like we got a good chunk of people that responded to that. So if we could go to the next question.
Okay, 1 second.
All right, guys, keep your eyes peeled. Next one's coming up.
Here we go.
Okay. Have you invested in multifamily before?
You guys are quick draw.
Yeah, quick triggers over there. We got 20.
Didn't have to study for this one.
All right. Yes, we got a good chunk of people that have already, and then a good chunk that haven't. And then there's also a lot that, several people that said no, but they want to.
Mhm.
Good. Another reason why you're here. So I like that, being purposeful with your decisions. Okay, let's do one more. We just talked about tax benefits, you guys, and we just talked about what that could do for you guys and some of the tax burdens you might have on your plates. And so this last question is, do you have taxable income that you're looking to offset? We're coming up on the end of the year. Are you looking for opportunities where you can try to protect yourself and offset some of that burden that you might hold? Yes, 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 yes. No, I don't know yet. I know there's some of you, I already invest with Gibby, so heck no. All right, it looks like majority of people here are putting in yes. Awesome. Sweet. I think that's it, guys, for the polls. That's all that I really needed to see. Just, so you guys know, part of the reason why I ask some of those things is because I like to get to know who we're talking to. We take a lot of pride in building a relationship with the people that we bring into these deals, and in our investor database, we get to know you guys on a personal level. We send out communications every single month. We jump on investor calls with you guys all the time. So it's very important for us. We believe that this is a people business, and we put our relationships first. So anyway, that's a little bit about that. But next, I just kind of want to talk about next steps with you guys. Like I said, we're trying to keep this quick with you and keep it right around 30 minutes. We just kind of passed the 30-minute mark, so we'll get close to the end here in a second. But I just want to thank you guys too for taking the time to answer the polls and also make it with us, to the next steps section, right? And so, first thing to do here is review the offering, which we kind of just did. We reviewed the offering a little bit, but you're welcome to do so more in the investor portal and the deal room. If you're ready, then copy that link or click that link and go follow it to the investor portal. If you haven't done so already, some of you guys have already done that. So that's great. And some of you are also, already invested into the deal. So thank you guys for showing up here again. You guys know who you are. The investor portal is where every single thing will be stored for you. Okay. Things like subscription documents, tax documents, deal performance updates, asset information, and a whole lot more. We've worked really, really hard to give you guys the very best investor experience that we can. Now, after you've reviewed the offering and gotten all your questions answered, then you'll review and sign the PPM and the subscription documents. The PPM stands for Private Placement Memorandum. It basically goes over all the terms of the investment. All the subscription documents can be signed electronically now for convenience. So we don't send you anything physically. It's all done electronically, which makes things a lot easier. And after you do sign the PPM and subscription docs, then we do need to verify that you are an accredited investor. And like I said before, if you don't know if you're an accredited investor, that's completely fine. Connect with either Caleb or myself after the webinar, and we can help explain and, kind of go over the details of what that might mean to you and how you qualify to be an accredited investor. But being an accredited investor is an important thing, because once you hit that accreditation status, then you get access to multifamily opportunities that you wouldn't otherwise get access to if you weren't accredited. And so that is definitely something to strive for. And so those that might be on the fence, don't know, feel free to reach out. And like I said, we'll go over those things with you. So you can verify that accredited status in a couple ways. So the first way is a website that we use called verifyinvestor.com. It's quick. It's great. You can, my dad did it. You did it, right, Dad? Yep. So he did it last year, I think, when we started having him come in as a passive investor on our deals. So there's verifyinvestor.com. That's a great one. Also, if you guys want really quick, maybe Brett, Caleb, Megan, anyone, if you want to put just that link into the chat too, maybe people can copy and, paste it into a browser that might help them out. It's verifyinvestor.com. But
Yep,
the other
there it
way
is.
is, what's that?
Got it. It's in
Awesome.
there.
Thanks, Brett. The other way is to verify through your CPA. Your CPA can write a letter of accreditation, a verification letter, verify that you do hit that accredited status. Both are very effective. And lastly, if you've invested with us so far this year, then you won't have to go about this process, as we already have your verification that you are in fact accredited. And after the PPM and subscription docs are all signed, then you'll receive wire instructions to wire your funds and secure your spot in this investment. After that, really, you guys get to sit back. We call it mailbox money. So you just sit back, track the investment, and just be proud that you just added another source of passive income to your portfolio, and also with a really good team. So I also just want to give a quick reminder of critical dates for you guys and investment minimums. Now, I believe this is really important for you, just to always be knowing what these things are. Funds are due for this investment opportunity on December 28th. Okay. Now, I don't foresee that there will still be available come that time, availability in this deal come that time. Just remember, these positions are on a first come, first serve basis. And the fact that, like I said, we are already over 65% subscribed for the offering, I expect it will probably fill up here sometime in the next week or so. So if you are going to be serious about this, and if this is something that you want to learn more about or participate in, then reach out right away. We definitely want to make sure we get you into this opportunity. It's a really good opportunity, good offering here, good property, and we really like where it's going to go. So last thing, guys, here, I just want to put our contact information for both Caleb and myself. If you guys don't have it already, make sure you take a picture, write it down, whatever you need to do. But as per usual, if you guys have any questions at all about any of what we just went through, or you just need to speak to someone specifically, please do not hesitate to reach out to us. You can ask us any questions you want, even after the webinar. But if you do have some questions, feel free to bring them to the Q&A we'll have right after this. But we're more than willing to help in any way that we can, just to make sure that, once again, this is the right investment for you guys and your families. Okay. And then lastly, guys, as sincerely as I can possibly say this, thank you for making it with us this far. I know it was a lot to go through. Thanks for listening to our cool little intro video we just threw together. But we're really excited about this opportunity to have you guys on board. We're just grateful for your guys' potential partnership. And so thank you guys for taking the time to hear us out. I think now we just open it up to some Q&A. And if you guys have any questions, I think there were some in the chat, and I'm not sure where they are. Let me exit the full screen here. All right. Did we have any questions coming in throughout, you guys?
No, just the one that we already answered so far.
Awesome.
Yep.
Cool.
No questions yet. I've got the Q&A pulled up though. So
Okay. Sweet. If you guys have any questions, now would be the time. If not, like I said, you can follow up this after. And if you don't have any questions, then that means we did a dang good job, I think. So awesome. Thank you, David, for the compliment. Appreciate that. All right, guys, we'll give you about 15 more seconds. I know everybody's got dinner to go to with their families. Trying to go spend some time with my wife. Awesome. All right. Well, I say we wrap it up, you guys. No, Michael, no, it's okay that you're late. We know you're already in this one with us, and, we'll be following up with you here shortly. But appreciate you jumping on, even if you're late. So, Brett, Megan, Jim, Caleb, anything you guys want to add before we wrap it up?
no, I think everything was covered really well. Great opportunity. Lots of potential with this one.
And if we don't talk to anyone before the end of the year, have a very Merry Christmas and a Happy New Year. Yeah.
Absolutely.
Absolutely, Caleb.
Perfect.
Great touch there. Thanks, guys. Appreciate your time. Have a great week, and we will see you guys in the portal. Look forward to hearing from you guys. Bye-bye.